Everybody's trying to make some of this dough. This is what everybody wants in Forex. Everybody wants all of this. Everybody wants to be speaking to Benjamin like, hi, Benjamin, how are you going, right? So guys, today I want to discuss with you guys how you can go about making all of this. But the problem is a lot of you guys have small trading accounts. So in this video, I'm going to be teaching you guys 5 actionable steps, 5 steps to going about building that, or rather growing your small trading account into something huge. How can we use one of this? Because I know most of you guys have either 1 or 2 or 3 or 4 or 5 or 6 or 10. You want to take this and make all of this, right? So this is exactly what I'm going to be talking about. But before we jump into the video, let's say hi to Benjamin real quickly. See this guy right here. This guy, my best friend. He never lets me down, you know. He never lets me down. I say, hi Benjamin. He says, hi Dabs, how are you doing? You alright? Yeah, I'm doing alright. Anyways, guys, so let's jump into the video. Don't mind me, I'm just fooling around, guys. So you guys know me, I'm Dapper Willis. I like to give you guys the most realistic approach to growing your trading account, not of all this fluff you guys keep seeing on the internet and stuff like that. The most realistic approach to growing your trading account. Now, guys, if you're interested in finding out the most realistic way to grow that little money into this, I suggest you stick around to the very end of this video. Now guys, let us go. Yes, I'm back again, guys. So step number 1, let's dive right into this, because I ain't got time, man. You know, money waits for nobody. Benjamin waits for nobody. See, this guy is very impatient. This guy waits for nobody. So let's kick this off. What is the, what's the first step to going about growing that small trading account? Sorry, apologies if I keep looking down. The reason I keep looking down is I've decided I had to take down some notes before I did this video, because I did not want to miss out on anything. Okay, I want to educate you guys as much as possible. I want to share as much value with you guys as much as possible. I used to do this before in the past. I used to flip accounts. I used to take $200-$300 to $5-10K back in the day. I don't really do that. I don't really do that these days, because obviously I have a lot of money at my disposal. I have a lot of investors that have invested with me, so I don't need to flip accounts. But for most of you guys who are watching this, I know you don't really have that much money. If you have $100, some of you have 500, 1K, 2K. It's not really a lot of money. You want to know. You want to take things to the next level as quickly as possible, and I completely get it. Now, what is the very first step? So step number 1, okay? We have 5 steps to growing that small trading account. Step number 1 is you want to first of all identify how much money do we even have. This is step number 1. So you need to identify how much money am I working with? How much money do I have at my disposal? Now, for most of you guys, you have between $100 to $500 at your disposal. For those of you guys who are a bit more buoyant, you have about 1K, 2K. So for the sake of this example, I'm just going to take $200 out of this. So this we got about $10,000 here, right? So it's just going to take 2 out of this right about here. So for the sake of this example, we have $200, right? So the very first thing you want to go ahead and do is establish how much money you have. Now, once we've been able to establish how much money you have, we now want to identify where exactly is our end goal. This is very crucial, because in the process of flipping and trying to grow a small trading account, we tend to get carried away. How do I know this? It used to happen to me a lot in the past. I will be trading, I got $200, $500, and I'm flipping, and I get to, because I do not know my end point, I just keep trading, and then eventually I blow all of it back, even down to the $200. This was many years ago. So the very first thing you want to ask yourself is, this is step number 1, and which is the most crucial step, is how much money do I have? And where do I want to take this money to? So for the sake of this example, let us say we want to take $200 to $10,000 as we have here. Now, once you're able to identify the end goal, and guys, please, once you get to your end goal, you have to click the withdrawal button, but I'll get to that in a bit. So $200 is our game plan. This is exactly how much we're trading with, right? So the next thing you need to ask yourself is, okay, I've got $200, right? How much do I want to risk? You have to understand that because of the fact that you want to hit a very, very huge go as in the shortest time possible, you're going to be risking something quite significant. So hold on, guys. Yes, I'm back again, guys. Sorry about that. I was choking a little bit. So for the fact that you have a small trading account, you're definitely going to be risking a lot of money. Now, I usually advise that at this point you risk between 15 to 20%. Okay, so what have we been able to identify in step one? How much money do we have? Secondly, at what point do we want to get out? Do we want to cash out? Because this is really important. And we've been able to identify what our risk. So our risk per trade will be between 15 to 20%. Step number two, and this is the second thing you need to ask yourself and you need to be able to identify. So we've been able to identify that we got $200 and it's $200. And if we're going to be risking $20 per trade, this simply means that we have 5 lives. This is so important. We have 5 lives. We only have 5. Like, we can only mess up 5 times. If not, we're gone. Okay, so this is very crucial, because once you put yourself in this mindset, you're geared for, like, I'm only going to be filtering out for the best trades. I only want to take the best trades. And for the fact that you have 5 lives, this is usually my advice, and this is usually what I like to do. Once I get into that mode of survival, like I only have 5 lives, I usually like to have what they call a circuit breaker. So what does this mean? In the event that whilst you're trading this little account up to the $10,000, and maybe your first trade is a loser, your second trade is a loser, by the third trade, you should stop trading for at least 30 days. This is known as a circuit breaker. Now, the problem a lot of people face is they just want to just keep clicking. And once they start losing money, they want to make all the money back. Don't forget, we're trying to be smart about this. We want to make this guy. We want to turn this to this. So we have to protect this guy with everything we've got. So in the event that you start trading off, now this is worst case scenario. I always like to speak from the worst case scenario first before I work my way into the best case scenario, so that, because we all know how Forex is, guys. Come on, Forex is one of the most challenging industries to trading. Let's not sit here and act like, everything is all, rosy and calm and cool, where I know that most people are losing money. So worst case scenario is if you start trading your small trading account and you encounter losses, at the third trade, which means you're now down 60%, stop trading for at least 30 days. Okay, are we clear on that? Are we good on that? I think we're good. Just making sure that this is recording. All right, guys, so that's absolutely recording. Anyway, so at the end of 3 losing trades, you have to stop and wait for 30 days. Now, in the event that you kick off your trading, which I know by the time I'm done with this video, you will not have to be that guy who has to stop trading after 3 trades, because I'm going to be showing you guys the most realistic approach to ensuring that your trades are winners. Yes, I'll be giving you guys a strategy, or rather a way to find a strategy to ensure that you are able to turn your little money into a lot. But worst case scenario, I just gave you guys, if you hit that loss 2 or 3 times, just relax for about 30 days, right? However, on the flip side, if things are all going according to plan, just keep smashing it. Like I said, I know you guys are going to be smashing it, because I'm going to be sharing with you guys the most realistic approach to what flipping your account, the best strategy, the best technical approach, and all of that jazz. All right, guys, so let's jump into step 3. So what is the third step that you need to obviously accomplish in order for you to be able to flip this $200 into this $10,000 we're talking about? So don't forget, in step 1, we spoke about, sorry, just making sure this is recording. Guys, the last thing any content creator wants to do or have happen to them is be talking and yarning and and then at the end of the video, shit didn't record, right? So this is why I keep checking in. Pardon me if it looks a bit unprofessional, but hey, it is what it is, right? So back to what I was saying. So step 3, before I get into step 3, let's quickly recap what we spoke about. Step 1, identifying the capital. And step 2, identifying the risk. Like we said, $200 capital, we want to exit at $10,000. Step 2, which is our risk management, 20% risk per trade. And worst case scenario is we can obviously lose 3 trades out of that, and we have to stop trading for 30 days. Best case scenario is we keep making winning trades and we just go all the way up from there. Now, guys, step 3 simply is skill set. You will need a certain level of skill set to pull this off. Forget about every other thing that goes with this. Your technical analysis needs to be spot on. If not, you can kiss this whole flipping account, this entire operation goodbye. Okay, now the reason I say this is you can have the best risk management, you can have the best, your psychology can be from a psychologist, and you still won't make any headway if you don't have the best technical approach, right? So what do I advise in this point? What do I encourage you guys to do? Now, I always speak about, the top-down analysis. I always speak about, how you should go on higher time frames and scale down to lower time frames. But let me quickly give you guys a recap as to the best approach to taking your small money into $10,000, $200, $10,000. What you need to do is understand a concept called the top-down analysis. Okay, so what does this mean? So the top-down analysis is basically when you go on higher time frames, identify thousands of pips into the future, scale down to lower time frames, and trade in that direction with your little capital. Okay, now why do I encourage you guys to do this? First of all, I've been doing it for many years and it works, as you can tell. Secondly, you're more likely to make more profitable trades. You're more likely to be correct. Why? Because the higher time frame paints the picture for the lower time frame. So whatever happens on the higher time frame is what the lower time frame now does. I give you an example. As at the time of recording this video, GBP USD is heading south on a higher time frame. You will notice that the lower time frame will simply you might see it retrace a bit, but overall the market will head in that direction. So guys, I advise you guys to study and learn what they call the top-down analysis. It is the absolute best. For those of you guys who are wondering how you can go about learning the top-down analysis, the link is going to be down below. It's called the Forex Mastery Program. I put it together myself. I feel like it's one of the best, if not the best approach to the market. You can use it for any market, Forex, indices, cryptocurrency. It is absolutely freaking amazing, and it's just 99 bucks. Imagine. So do yourself a favor, click the link around here. Scrolling, my team always puts it around here or in the description. Grab it, digest it, guys. I cannot stress this enough. You need to digest it from module 1 till module end. Literally, I walk you through the beginning process of drawing your trend lines properly. I tell you what, something as little as drawing trend lines, traders get it wrong. You might think like, oh, it's just trend lines. A trend line can literally be the difference between flipping that account and blowing that account. A trend line, if not drawn properly, can be the difference between getting into a trade prematurely or staying out of the trade. How to draw your support and resistance properly, how to draw the zones properly, and then the course now takes you all the way down into some more advanced techniques, how to use Fibonacci, the most realistic Fibonacci levels and stuff like that. Okay, I speak about my entry and exit strategy, how, most importantly, to identify thousands of pips into the future, because at the end of the day, the last thing you want to be doing with your little account is be getting in and out of trades. Because statistically, the more you get in and out of trades, the higher the chances of you blowing that account. So what the top-down analysis will do for you and the Forex Mastery course will actually do for you is it will teach you how to identify the highest probability trades, how to get into the highest probability trades, and how to hold those trades so that you can juice out everything, man. Okay, how to juice out everything. This way, you just watch your $200 grow. So you got 2, you wake up, you have 3, you wake up, you have 4, you wake up, you have 5, you wake up, you have 6. Like literally, I don't even touch my charts. I just click the button once. And then because I've been able to identify thousands of pips into the future, all I do is I just lock in my profit as the market goes in my direction. So guys, that's it for step 3. Once again, the top-down analysis, like I'm not even going to start telling you, oh, do that. Like get the top-down analysis into your brain. And another thing for the Forex Mastery students who are watching this, my entry strategy also works for lower time frames as well. The ideology, the methodology also works for lower. Just simply scale down to lower time frames and trade as much as you want. But I would advise that when you get into the trade, because of the fact that we've been able to identify thousands of pips into the future, just allow your lower time frame trades roll over into the higher time frame movement. This way, you can risk as little as 30 to 40 40 pips to make over 700 to 1,000. Yes, 30 pips. Yes, you can risk 30 to 50 pips to make 700 pips. It's absolutely mad. If you think I'm joking, click the link down below, grab the program, and you'll see it for yourself. Now guys, step number 4. Now this is where things start to get really interesting. I've literally written down some stuff here, so pardon me if you see me reading here. Now by the time you're done taking the Forex Mastery program, you will be able to understand what it means to trade in the direction of the trend. Now it's very important for you to trade it in the direction of the trend because you tend to face what they call less resistance, right? With you, it's just like an ocean, right? If the ocean is flowing from north to south, the last thing you want to do is, sorry guys, I'm expecting a delivery. I'm expecting a delivery, something nice. I bought myself something nice because I have been smashing the market recently, guys. Let me just brag a little bit. Now, guys, I predicted oil prices from $64 a barrel to 110. Oil with the top-down analysis, okay? I predicted the surge in gold prices from the top-down analysis. I predicted the collapse of Bitcoin. Bitcoin, as at the time you're watching this video, probably about maybe... I actually called Bitcoin short all the way from 42K. Bitcoin is going to come down to about 39.5, 38K. Yes, at the time you're watching this video, Bitcoin is at 40K. It's so simple and easy once you know how to do it properly, right? So we've been making a lot of money in the market, so I said to myself, let me go ahead and order something nice. Maybe in my next video, I'll show you guys what I ordered. I'm really excited about it, and I'm just waiting for the delivery to come very soon. So yeah, they just asked me for my address. I'm waiting for it. Something very nice, right? So anyways, back to what I was saying. The river is flowing south. The higher time frame has told you the river is flowing south. All you need to do is identify what direction is the Forex market going. Once you've been able to identify it, then you can scale down to whatever time frame. I usually advise 4 hours for entry. If you're feeling a bit too, you can scale down to lower 1 hour time frame and trade in the direction of the overall flow, overall time frame, whatever it is you want to call it, right? So guys, don't forget, we only have this. We want to take the highest probability trades ever. We cannot play around. We only have 5 lives. So another thing is, if for any reason that you're doing your analysis and you cannot find any trends at the moment, I advise you stay away. You only have 5 lives. In this guy, you only have 5 lives. Stay away and wait. Be patient, okay? And keep doing that analysis until the market presents itself with tradable opportunities. Okay, tradable opportunities, and trust me, with the top-down analysis approach, guys, you will find those amazing trade. Guys, listen, since December we have been smashing the game. The opportunities have been coming left. I don't think we've had any losing trades since December. Can you imagine? I'm recording this video in April. It's huge, okay, and I'm really excited about it. So that's for step number 1, subcategory 1. Sorry, step number 4, subcategory number 1 is trade in the direction of the trend, which the Forex Mastery will teach you how to do, which obviously the link is down in the description. The second thing that I want to talk to you guys about under step 4. So step 4 is it's titled trading the market itself. So every other thing was risk management, do this, identify. This one we're talking about trading the market itself. Ensure it's trending. The second thing is, please don't buy or sell in resistance levels. Do not do that. The market will destroy you. Anyways, by the time you take the program, you will understand. But let me just explain to you guys. Wait for that bounce. Don't trade at levels. Always trade from an area of value. Okay, always trade from an area of value. An area of value is simply something known as, areas of value are things like areas of confluence, where you have trend lines, support and resistance lining up with Fibonacci. Literally, if a trend line, Fibonacci, and a support level come together, it's known as the Willis zone. Guys, the reason I named it the Willis zone was I feel like I kind of discovered it. And anytime that the trend line, Fibonacci, and the support or resistance line up together and the market comes in and bounces all off of it, best believe I'm getting into that trade, and best believe 9 out of 10 times that trade is profitable. Once again, I teach the Willis zone strategy on the Forex Mastery program, which obviously the link is going to be around here somewhere. But The essence of this is always ensure that you're trading from an area of value. An area of value is where two or more technical tools, not indicators, not freaking moving average or Bollinger Bands, those things don't work. Areas of value are where two or more technical tools, Fibonacci, trend line, or support, come together and the market comes in and you can visibly see candlestick action like a morning star or bullish engulfing bounce off of that area, wait for the bounce and candle close, and there you go. And obviously this has to be in line with the trend. It's not that difficult, guys. It's not that difficult to identify when you know what, when you know how to do it. Okay, so under step 4, subcategory 3 is, I know you guys are getting bored of this, but guys, who really gets bored of me? Hi, Benjamin. Guys, I'm freaking silly. Hi, Benjamin. Oh my God, who gets tired of making money? Anyways, guys, so under step 4, subcategory 3 is holding your trades for a longer period of time. Now, this is where I usually blow everybody out of the water, because when it comes to holding trades, I'm the OG. Like, I would hold for 600-700 pips. This way, I can literally grow a small account into something huge in literally 2 or 3 trades, because once I find those high probability 2 to 3 or 4 trades, I just hold it. Like, I literally just hold the trade and then just lock in profits. This way, I'm not always, like going to the charts. And I tell you something, guys, when you're always going to the charts, like I said earlier, somewhere along the line, you start having losses because the market only trends 40% of the time. The remaining 60% of the time, the market is ranging. So if you're fortunate enough, obviously after taking the Forex Mastery program and identifying the trend, that trend will only last 40% of the time. So if you are the type of trader who is always getting in and out, you will then exhaust your 40% of the trend, and then the market goes into a range for 60% of the time. And most traders struggle to trade during ranging times, and this is exactly where most of the blown accounts happen. So once the trend starts to occur, once the top-down analysis has told you, hey man, it's a trending time, you need to make the most out of it, okay? You need to take advantage of it and take your 20%, your $200, get into the trade and hold that damn thing for dear life. I'll also explain something to you guys. It is difficult to hold trades, I get it. Because you can be in $1,000 profit today, tomorrow $800, $700, up to 1.4, down to 700, up to 5K, 300. You have to understand that this happens because the market doesn't move in a straight line, okay? The market moves in waves, it oscillates up and down, okay? So we can be 1K profit, 700, 1.4, 700, 5K, 3K. And that's exactly how it's going to go all the way till 10,000 US dollars. So only patient traders like me who are confident in their analysis, who are confident in, that's what I'm saying, this is where the top-down analysis comes into play, because coming from a higher time, it's like Google Maps. You know where this thing is heading to eventually, right? So this would give you the confidence to hold down those trades. So guys, once again, I think this is the most important aspect of things. When you eventually find those trades that are profitable and are going well for you, don't be in a hurry to close them out. Keep them and milk them and get yourself some Benjamins. So guys, I think that's about it for step 4. So I've written down here step 5, which I feel is also very important, which I also feel is really important, which is withdrawals and go buy yourself something nice. That is the 5th step. So once you eventually take your $200 all the way to 10K, go to the mall. I live in Dubai. Like literally every weekend I'm in the mall. I'm always buying myself something nice, because at the end of the day, you have to reward yourself. Don't forget to hit that withdraw button. Okay, hit it, take the money out. I don't care how little it is, even if you grow it from $200 to $1,000. If $1,000 was your goal, withdraw $500. Treat yourself, okay? Because the brain is very interesting, right? Once you reward it for all the hard work, because trading this market is fucking hard, mate. It's difficult to trade this market every single day. You know, the emotional roller coaster up and down the whole place is crazy. So guys, once you're able to attain that goal and you get that result that you want, guys, click the withdraw. As you can see, it's a withdrawal right here, right? Click the withdrawal button. After here, I'm heading out to the mall actually. I'm gonna go splash splash on something nice, get yourself something expensive, put money in your bank account, change your shoes, change your environment, and we go again. So I think step 5 for me is one of the most important aspects. Withdraw your money and go get yourself something nice. Now guys, in order for me to conclude this video and finally let you go, obviously I spoke about step 1, how much do we have? $200. Step 2, 20% risk. After three losing trades, please stay out of the game. If the market goes in your favor, fine, carry on. Step 3 is your technical skills, your expertise. This will be covered in the Forex Mastery Program. That's for those of you who are sensible and wise enough to get it. Once again, the link is around here somewhere. Once you accomplish step 3, which is your technical expertise, you grab the Forex Mastery Program. Most of the stuff I'm sharing here are already included in the program. You will be on your way to success. Step number 4 is actually trading the market. Rule number 1, trade in the direction of the trend. Once the market is trending, allow it pull back into an area of value. Once the bounce happens, get a confirmation from a candlestick close, jump into that trade, and voila, there you go. And then we also spoke about holding your trade for a longer period of time. Once you're able to get those trades that look good, that look nice, hold on to those trades for dear life and close your laptop and go spend time with your family. And step number 5, when you do eventually make all that money from trading, don't forget to call Dapo Willis up and send me some money. I'll be waiting for you guys. I know you, because I know you're going to be successful, and I know you're going to make a lot of money, and I know you're going to make a lot of Benjamins. So don't forget to send me some. Once again, that's my time. I'm Dapo Willis. Thank you for staying with me to the very end of this video. I hope that you guys make a lot of money in the Forex market. Do me a little favor, smash the subscribe button and drop me a comment if you found this video helpful. I love you guys very much. It's time to go shopping. I'll see you guys later. Take it easy and peace out.